Let's talk about one of the absolute legends of investing, Peter Lynch. For 13 years, he ran the Fidelity Magellan Fund and put up numbers that are, well, frankly, pretty mind-blowing. But the craziest part of his story isn't just how well he did. It's his radical belief that the average person, yeah, you, can actually have an edge over the pros.
Just how legendary are we talking? Well, look at this number. If you had put just $1,000 into his fund, it would have turned into $28,000 in only 13 years. That's an average annual return of over 29%, a number that just left Wall Street's jaw on the floor. And then, after all that success, he drops this bombshell. Peter Lynch, a Wall Street titan, is dead serious when he says that an amateur investor has a built-in advantage. I mean, think about that. This idea completely flips the script on who's supposed to have the upper hand in the market.
So you have to wonder, right? If the experts are playing with one hand tied behind their back, where was this guy getting his home run ideas? Did he have some sort of secret computer algorithm or a crystal ball? The answer is way more interesting and a lot closer to home.
That's right. Lynch famously said his best ideas didn't come from a fancy Wall Street data terminal, but from just walking through the mall with his wife and kids. He found his biggest winners by literally just looking around, seeing which stores were packed, what products people were excited about, and what was happening in the real world.
And look, this isn't just some cute story. It's the very foundation of his entire philosophy. He argues that professional fund managers are actually held back by the rules and pressures of their own industry, rules and pressures that you, the amateur investor, are completely free from. Just think about the difference. A fund manager might be forced to own hundreds of different stocks, which means they can't possibly know them all deeply. They're judged every 3 months, so they're always thinking short-term and are terrified of looking different from the crowd. But you can own just a handful of companies you really understand. You can find those hidden gems before Wall Street does, and you can be patient. That freedom, that is your superpower.
Okay, so this all sounds great in theory, but does it really work in the real world? Well, you're gonna love this. Peter Lynch's favorite proof point didn't come from some high-powered hedge fund. Nope, it came from a 7th grade social studies class.
I mean, seriously, this is the ultimate test, right? A teacher gave her students a project, build a stock portfolio. No MBAs, no fancy software, just their own observations about the world. So, how'd they do?
The results were just staggering. Over 2 years, these kids' portfolio returned almost 70%. The S&P 500, which is the benchmark for all the pros, was up just 26% in that same time. They didn't just beat the market, they absolutely crushed it.
So what was their secret weapon? How did a bunch of 12 and 13-year-olds manage this? It wasn't some complicated financial model, it was something way more basic, something that's accessible to literally everyone.
This was their one simple rule. If you wanted to buy a stock, you had to stand up in front of the whole class and explain in simple terms what the company actually does. What do they sell? What service do they provide? So they invested in companies they knew from their own lives. Nike, The Gap, Pepsi, Walmart. It's a strategy built on pure, simple common sense.
Lynch absolutely loved this, so much so that he turned it into one of his most famous sayings. The point is so powerful. If a business is so complex that you can't sketch out what it does with a crayon, you probably shouldn't be putting your money into it. The kids at St. Agnes just got that instinctively.
Now, the St. Agnes story is amazing, but it's not the whole story. Invest in what you know is the perfect starting point, but it's not the finish line. To really make it work, you've got to pair that real-world insight with a little bit of discipline. So Lynch laid out a few simple but super powerful rules to follow. He really boils it down to these 3 things. First, you need to be able to tell a simple story about why you own a company. Second, and this is the big one, just liking the product isn't enough. You have to peek under the hood and check the company's financials. And third, you need to have the right mindset. You have to be prepared for the fact that markets go down. Let's just double-click on that second rule, because it's the one that trips a lot of people up. Spotting a cool product or a busy store is what gives you the idea. That's your edge. But the next step is doing your homework, making sure the company is actually making money, growing its earnings, and isn't drowning in debt.
This chart shows you exactly what understanding the finances looks like. It's a fundamental truth of the market. Over the long haul, a company's stock price, that jumpy line, will always follow its earnings line, that smoother rising line. Your job is to find companies where that earnings line is heading up and to the right, and then buy the stock when the price looks reasonable.
And that brings us to the last piece of the puzzle, your mindset. Lynch always said that more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. Panic is your enemy. If you've done your homework on a great company, a market drop is just a sale. It's a chance to buy more something you love at a discount.
So what's the big takeaway here? It's about shifting your entire perspective. It's about realizing that your everyday life, what you buy, where you eat, the apps you use, is basically a 24/7 stream of high-quality investment research, if you just know how to look at it.
So from now on, don't just be a consumer, be a detective. When you see a coffee shop that has a line out the door every single morning, ask yourself why. When all your friends are suddenly obsessed with a new brand of running shoe, dig a little deeper. These are the breadcrumbs that can lead you to the next great investment.
Lynch summed up the whole thing so perfectly with this one line. Your own personal experience is a huge advantage. You can see quality, you can spot trends on the ground, often months, if not years, before the suits on Wall Street catch on.
So the next time you're out and about, keep your eyes open. The next great investment, the one that could be a real game changer for you, probably isn't buried in some obscure financial report. It might be sitting right there on the shelf in front of you, just waiting to be discovered. The only question is, are you going to spot it?